Hello, and thank you for watching the watch list. I'm Isaac, and this is my colleague
Rolly Kikimoi, and we're glad that you joined us today.
I think there's been quite a lot that's happened this week in African markets. If you turn to Zambia, for instance, there was a surprise firing, for lack of a better word, of the finance minister there, and their replacement with the former deputy governor of the central bank. This really came as a shock to a lot of investors because it's been a long journey for Zambia over the past few years. They've been really affected by the slump in copper prices. Their exports are primarily copper. In excess of 60% is just raw copper. And this really contributes a lot to the economy. Now, the downturn in prices actually really impacted their local economy and their exchange rate over the past few years, and this has led to quite a few challenges in the local country. There's been, as I'm sure you've heard, quite a bit of a downturn in growth, and a lot of global holders of their bonds have been really scared off by what's happened in the last few years. They've also amassed quite a bit of debt in the past few years. And a big part of that has been foreign currency. So that loss on the exchange rate has really hit them. And in fact, I think I saw something last week. Their bonds are the only USD bonds in Africa which have returned a loss so far this year to the holders of those bonds. And it really is just a manifestation of the concerns that have taken place there.
Bearing in mind, Mozambique is also a hot one, but it has been positive.
Yes. Yeah. Mozambique has actually surprisingly turned because they have quite a bit of gas, offshore liquefied gas, which they're planning to begin taking advantage of in around 2021. And this year, in fact last month, was when the project was actually fully announced, and that really led to a burst of optimism with regard to that particular country. Zambia has had not as much luck in the past few years. This latest move could be a positive one. It's still yet to be seen exactly what this new finance secretary will propose, but she's already come out and talked about trying to reduce government expenditure, primarily that which is not really development oriented. So that's one of the measures that she's talked about. She's also talked about trying to widen the tax base and try and basically improve the collection of revenue by the government, at least to support them through this trying time. But the full impact is yet to be seen. I think we'll have to give it a few months as well to help build that confidence and build some sort of track record of progress towards some sort of resolution out of this slump.
Maybe even more than that, because you see, this is politics, and this
is
as well, and this is the African continent. So regardless of whatever she said in public, you always have to put a discount.
Definitely. Especially what's been happening in the past few years, where they've been consistently saying it's time for change. We want to, make all these measures, but they've never really, put the, rubber on the road and actually started on the journey. So we'll have to wait to see how this particular scenario plays out.
Maybe bringing in the Eurobond yields into the story. I think it was the yields went up a bit immediately after the announcement. We're talking about 19. Did it touch 20%?
No. I think it was 19 point something.
19.something%. I don't know. That is the highest African Eurobond.
Yes. Right now it's the highest yield.
It was at about 16% early on in the year. So I don't know. It's a debate on where it could land. But again, like you said, it's so long as investors in the fixed income Eurobond market get a good view on it, form a view on what the finance minister will do and what that would mean for the country in terms of its, its fiscal position rather, and tax collection, how the country's trading environment will be, whether it will be a good spot for investors to come in. Like we were talking about Mozambique,
yes,
and I think one of the things that was positive was when the US company had Anadarko committed, how much was it? Was it $20 billion?
Yeah, it was within that range. Yeah, within that range.
What I remember, it was the highest capital expenditure for foreign company to announce and that capital heading towards an African economy at least. That's what I remember. But yeah,
yes.
Zambia is definitely an interesting economy, and let's see how it turns out.
Yeah. I think it's ultimately a question of confidence. At least in the short run, being able to get the market to trust you and actually trust in the plan that you intend to deliver.
Yeah, certainly. Yeah, and then maybe since today is just a South African theme, yes. Southern African theme rather. We talk about South Africa. South Africa announced a rate cut.
Yes, I think I saw that.
The last time this was done was in March 2018. They cut by about 25 basis points to now 6.5%. That's where now the repo is. If you look at consensus, I think this time it was unanimous amongst the members of the committee, compared to last time where 3 of the members voted
against the
they just said let the rates remain where it is, maintenance vote, as opposed to two of them who voted for rate reduction. And I think this of course, maybe before we go to a more global perspective, is that South Africa is a significant is it emerging market?
It's an emerging market,
significant emerging market
at the moment,
economy. And certainly what happens in the global environment partly influences how the economy, how the central bank, South African Reserve Bank ends up doing. So, as you are aware, that the general monetary
policy view
is a reduction. We've seen now the US Fed now taking a more dovish tone. The same thing with Europe, dovish tone, and dovish will mean rates coming down. And we've also seen some other major countries either holding or cutting.
Yes.
And you find Korea and Australia have already cut their rates, and a country like Japan holding the rates stable. In terms of how this will impact currencies, it would really depend on how major your currency is. Of course, it would be potentially negative for the US and positive for other frontier markets, potentially. I don't know what
in terms of currency, yes. But I think the sort of rapid change to a more dovish stance over the past couple of months really just a sign of lower growth expectations, primarily in developed markets. The IMF, as at last year, was expecting global growth to be 3.5%. Now it's expecting to be 3.3%, and this is largely because of trade tensions and various risks that are now posing a threat to the global economy. So, sort of in anticipation for that, a lot of these central banks have changed their tact and are now thinking of cutting to at least support growth to some extent. And it's not so much that they're afraid of negative growth this year, it's that they don't want to see a slowdown this year, and they don't want to see negative growth next year or the year after. So it's more of a forward-looking perspective for them at the moment. So we're not likely to see a full cutting cycle, maybe just 1 or 2 cuts here and there, at least to steady the ship, and then more of a wait and see and data dependent approach going forward.
But again, the question is, do they have enough room
Yes.
Well, maybe that will be a topic for another day.
Yeah.
I think we leave it at that. Thank you so much for joining us today, and we look forward to you joining us in our next edition. Thank you so much.